NASDAQ Composite, NASDAQ 100, and NASDAQ 100 stocks got killed. And the final, I'm doing the diamonds. We're uploading the Panther Quant for all of our big traders in the NASDAQ. Not only that, everybody, today's date is 12/9 of 2020. Let that be known. And the other thing that we want to talk about is the fact, let's let the diamonds, let's let the algos push them to all-time highs. And let me tell you something. We hit the high all right today in that NASDAQ 100. We dropped 243.82 points off of that high. That intraday low was at 25.81 on that NASDAQ 100, which has all the high-tech beta stocks that got slammed today. Oh, yeah. And not only that, how do you identify in the NASDAQ 100? Amazon got slammed, Shop got slammed, Google got slammed, Melly got slammed, CMG, MTD. The list goes on and on and on and on and on and on. And they bid them up with an algo. And they did. And each line is $70.67. And we came down one, two of them right there. So we're on the 10-day simple moving average on a daily chart in the Panther Quant system, which is not your retail. This does not exist nowhere except here. So what ended up happening to all of my friends is, let me show you the house of blood. Yeah, you see it? It's all red. You see it? It's all red. It's all red. Why is it red? There is a reason why. Because these stocks were bid up with machines in the exchange model. And that's something we've been very well aware of for the last 15 years. NASDAQ 100, Diamond Quant, Diamond Quant, Diamond Gap, Gap, Gap. Drops it down, rally starts here. It starts right there on that date on 11/24. Oh, imagine that. Thanksgiving rally. Gap after gap after gap. Now, how much more downside is there? There's a lot more downside coming. Oh, yeah. Not only that, for all you NASDAQ 100 people in the retail model that bid stocks up, oh, like Mr. Kramer says there on CNBC, you Robinhood trading accounts probably had a lot of margin call and a lot of margin call debt selling today. And part of what you've seen and the big drops, like in Amazon, $72, that was a margin selling in that name. The other ones, they had the punishment coming. The GOOG and the GOOGL, yeah, they have it coming. And they got bid up to the highs, and they got super overbought, hitting 98, 99, and 100% overbought in all indexes at one time. Yeah, you all know. You've been watching the videos. You know what you were told by me. Yeah, you were told before it happened, not after it happened. There's a good way to refresh your memory right here. Let's go back. Refresh your memory. Do you see it? Do you see it? Volatility is coming. Oh, yes. And they were all overbought as they were. One of the things that we talk about are overbought markets, and we talk about the NASDAQ comp, extremely overbought, 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 over what? Bought. Do not feel bad for the inexperienced, non-professional people who do not understand the things I'm talking about. We go by pure mathematics. It's not a retail model, as you all know. And the other thing is, everybody's anticipating this big, great rally by the end of the month, and this big Santa Claus come to see you, Saint Nick. Hopefully he didn't get overweight and can still get down the chimney this year. Oh yeah, all your Covab stuff. Gap, 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 and it's all coming down. Oh yeah. So once again, buy the rumor, sell the news. Everybody believes that the rally has to keep going. We rather think that you have to have a nice market washout and wash them out with the pullback. What are bull markets famous for? They're famous for one thing, and that is taking the buyer out. And the people that bid them up here at the highs and that bid the equities at the highs, and now the house of pain has come upon it as it is right now. And as that overbought reversal, which is only healthy for the market. What is not healthy is these diamonds that you see in the Panther Quant here are all algos in the exchanges. And the exchanges ran these stocks to extreme overbought, and then they get people to chase in and buy the highs of the market. And then when people buy the highs of the market, bam, and you come down and you come down hard. So when we take a look at the run and we take a look at other times when the NASDAQ 100 likes to have its corrections and big rally up and big rally up, bam, here we go, big rally up. That's the beginning of it. Big rally up. How do you confirm it? You have to have a big red bar on a daily that takes out the last 4 up days. And this is what the qualifier is. But before we go there, let's take a look at walk the dog with the algorithm. People buy at the high, tumbling down, and everybody gets washed out. Same algorithm, same diamonds on the daily level. Walk them to the top and do what? Smash them to the bottom. Wash them all out. And then I come in and buy. Now, here we go. How about this little one? This leg. And you had leg 1, 2, and now 3. And now, as I blow it up on the NASDAQ 100 composite, take a look at Panther Quant here carefully, because this is pure mathematics. And pure mathematics never lie. You're bartering with markets, you're gambling with markets, you're what if with markets. Do you think it will? Oh, what about, oh, he said this, oh, she said that. That doesn't cut it, pal. No, it doesn't. What does cut it is how the machines operate the markets and then how they bring in the little guys to buy up here at the highs and then down it goes. They missed the move over here, and people always like to buy when? Late. They feel that they missed out. All aboard! The caboose is loading. All aboard! So everybody gets on up here, and then bam. And they all get on up here in other rallies that we have had. But I am telling you that this NASDAQ 100, what the high frequency algo in the exchanges, and we are giving you the update because it's Christmas time. We care about you. Not only do we care about you, we care enough about you to let you know there is more downside coming. And yes, you had a great algo rally, but how many of the public people were even in on it? And they always like to buy into the 5 days going to the collapse. That's the way it always works. Yes, it does work that way. And we know that people get margin debt when you get at highs. There is more downside coming. Oh, yes, you will have ranges. Oh, yes, everybody's expecting who? St. Nick, aren't they? But what if he starts sliding down the tree and just keeps going? Uh-huh. So, individual stocks that got bid up to the highs and different kinds of plays and different asset allocation models will kick in. Believe me. And when I said that volatility would show up, you would believe me now, I hope. Maybe you have to see it over and over because it can't happen in your mind, but the tape says it does. And there it is. So let's break up the Panther Quant to the mathematical equation. Now, you want to see how accurate it is? Check it out. $70.67 per freaking line, which is 1/2 delta in our system. And we can see over here that that rally started with that gap right there. One, another gap, another gap. Then you had a little fade, but look at what happened. You gapped it up and you couldn't break below it. And then we take the last 5-day period. So we go like this. One gap all the way up to the top. Qualifier. This bar took out this whole last 4-day top in the algo system that is in the exchange model as it did, as they had walked it up there to create what you would see for the big guys that do have a little bit of chart stuff behind them from a public view, is you were overbought and you had gone, and people, after 35 years, we've seen every top and we see the same behavior at every one. That's never changed. The only thing that's changed in the exchange model is the new technologies that the exchanges are using in high frequency trading technologies that you have nothing at all sitting at home with your computer to compete with them people. We compete with them every day and we beat them. And this is the big downside. That is a 10-day moving average on the NASDAQ 100. Now, nothing goes straight down, but let it be known that equity prices are extremely overvalued in this last rally, and they are. Do not be fooled about the pundits on TV. Do not be fooled about the analyst upgrades and the downgrades. Do not be fooled by outside speculations per se, but rather let us focus on the math. Let us focus on the reversals. Let us focus on machine-driven exchange models used in the markets and how they can really do a number on people because they don't know where it's coming from. You think it's buyers and sellers just like you. No, you're wrong. Oh, yes, you are. Uh-huh. Machines are the volume. You are a minority in the marketplace, okay? And they're really good at pulling people off of the sideline at the highs. That's what they do. Now, if you're one of them people that are chasing the markets at the highs, nothing goes straight down parabolically. But you will have, and you will be coming down here. And you will be coming right back over here where this diamond is. Oh, yeah, you will. And let me tell you another thing about these overbought stocks. They have a lot more downside. And they do. And they have upside. And they do. But the ones that remain overbought have a lot more downside. And some of these stocks overshot the highs, like Tesla being an example. Oh, there's many of them. I can go on and on. The only cheap one I found out here is Amazon.com stock. That's the only one, my friends. And relative to other FANG stocks and other stocks that got bid up to the highs. Again, it's always the same picture. It's always going to be the same event. This is a year-end event. And you had a big rally with the machine-driven rally over here already. So everybody's still anticipating it up here at the high. They still believe in their mind that this market's going to go a lot higher, and I'm telling you it's not. Oh, yeah. And you heard me. And guess what? Everybody has a price to pay with their behaviors. And behaviors in the market have consequences. And this rally that happened here to there with that overbought and that profit taking is we can rally back up to a lower high and roll back over to make lower lows. So, once again, welcome to the NASDAQ 100. Welcome to the big NASDAQ 100 stocks that got mutilated because they got bid up and they too got overbought. So, what are we going to do? We're going to make money with it all. And we are. And how do we do it? It's very simple. You pick off the ones that are oversold that bounce, you buy them, you sell them. The ones that are still up at the highs, you short them, they fall like a rock, you get paid. Welcome to our world. Take the free trial. Get in on it live or get left behind.